It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's already Monday evening. I know that weekend flies by. Hope you had a great summertime weekend. Back in the game again, though, for the second week of the month of June. Monday evening, June 8th, 2015. Before we get into tonight's newsletter, I do want to remind you I teach all of this information covered in our nightly newsletter to all of our students here at schooloftrade.com. Head over to schooloftrade.com, check out the free trial, and we've got someone standing by to answer any questions you may have about registering for your free trial. Also, I want to make sure to point you in the right direction here. Make sure you're watching this video on our trading blog over here at sidewaysmarkets.com. If you're watching it on the YouTube page, there's a link right in the description of the video. There are 3 reasons why it is in your best interest to go out and watch this video on our trading blog. First of all, you can download all the charts right below the video tonight by following that link right below the video. You can have all these charts you're going to see me talking about tonight in the video. You can download all of them, use them all tomorrow at your leisure. Second thing, upper left-hand corner, I've got a free pass for you guys and gals. Come out and join me in my trade room as a guest. If you're not a member of School of Trade and you'd like a free pass to our trade room, you know where to grab it, upper left-hand corner. And then third thing, yep, there was 3 reasons right above my ugly mug. All I need is your name and your email address to add you to our nightly newsletter mailing list. I'll shoot you an email every evening just before 8 p.m. Eastern Time when the newsletter goes live. That way you know it's ready to go for tonight. So make sure you grab your free pass, register for the newsletter mailing list, and download those charts for today. If you grab your free pass or you register for the mailing list, please remember, I'm going to send you a verification email to make sure I have the right email address, make sure you're not a robot, and of course for you to give me approval to keep sending you emails. So make sure you check your inbox. All right, back on the horse, dust off the cobwebs. Hope you guys had a great reaction Monday. Today was the Monday after non-farm payrolls. It's a Monday that is either crazy chaos or it's relatively slow. Today we had a relatively slow reaction Monday. So traders coming back to their desks. First kind of official summertime weekend here. I had a great weekend. Hope you guys did as well. Went to a lovely event here in Los Angeles over the weekend. Had to put on the tuxedo again. Always looking for a good excuse to put on the old suit. All right, let's get jumping into it here. How about the gold? Going to start with a little bit of a top-down approach this week. We got a lot of big picture stuff I want to look at this week. That way you can use it for the rest of the week. Here is a 32 anchor on gold. Woo! Very slow time frame. You're going to see a few of these in tonight's newsletter. And don't forget, you can download all the charts right below the video. What I want you to keep an eye on here, there are 3 things here to be looking at. First of all, the trend leading into this sideways range is down. Got a bearish bias, a bearish directional bias on this trading range. Then we see a sideways range, right? Double bottoms. We got 1, 2, 3 tops there. Then we have, very, very important here, is a fake break of that high. Now, in case you're not aware of this, knowing that we have the bearish bias followed by the flattening of the moving average, the inability to keep making lower lows, right, higher highs, and then bam, the buyers try and clearly fail. This market, when we fail to the upside in a bearish bias, right, we call this a trap. It's a bull trap. 99% of the time here, we're going to find our way down to that low. In this case, it's right around that 47.7. So we can definitely take a look at this directional bias is down into our trading range. Whoops-a-daisy, bull trap, collapse back in. And again, sellers, you guys got to be keeping an eye on that 47.7. You could say it could go lower here, 43 or so. I'll put that down there. That would be kind of your Uber extension down there. But you can see most of the lows here are right around that 47.7. So that's going to be your safe spot. 42.3 would be another place, say 42.5. And of course, the last thing here is you'll notice the measured move coming off this high here. It puts us pretty much right at that 47.7. So what I want you to keep in mind here on gold is we're migrating our way down to these lows, but keep in mind where we are when we get down there, okay? So you don't try to sell those lows later on this week, okay? Bears, you guys have a definite bias here right now to the downside. You guys are definitely in control. Moving now, cut that 32 anchor chart in half, and here we have a more tradable anchor chart, right, if that's a word. A more tradable anchor chart. I know anchor charts usually aren't what we're going to be trading, but this is more accurate as far as it's a shorter time period. It's going to give you a little bit better areas to look for here. And as you can see that channel that we drew in here. And then, of course, you can also see there's measured move support, right, coming off that high. Not the exact same measured move that we found earlier, but really quite similar there. So getting us right down around those lows, that's where we expect this price to try to finish off later on this week. What about for tomorrow? Well, we're looking good here. Definitely have a bearish trend on the gold right now. We're trading right in the middle of this channel, though. You'll notice we're a little bit stuck in the mud right in the middle of these channel here. Sellers, you guys are going to want to stay patient for the best opportunities up at resistance levels. So sellers, you guys are looking to get short at these resistance areas overhead. And if you're a buyer right now, you've really got to get to it quickly here because you don't have much room until you start running into these resistance areas where you're going to start seeing the sellers re-enter the market in a lot larger amounts. Also, keep an eye on a measured move going higher here. It doesn't take a rocket scientist to really see that measured move will probably lead us up into this area, 88.4, 83.4, and then give us a chance to sell this sucker right back on down. If you're a seller right now, you're looking for opportunities up near those highs. If you're a buyer right now, keep in mind you are going counter trend on this, and the best ways to be a buyer will be to find short-term resistance, such as the 76.8, the 80.5. I'm sure you guys can find some short-term resistance. I'll provide it for you tomorrow in our live trade room if you're with me in the trade room. But look for those resistance areas to fail, right? So look for seller failure as you go up to that 83.4 to 88.4 area. So sellers, you guys got to stay patient. Buyers, you guys have the opportunity right now, and it really is right now. You're going to have to get to it quick before you run out of space here as this price goes higher. Remember, as I always say, if you're looking to be a buyer in a downtrend, best way to do it is wait for the sellers to try selling short-term resistance, and then when they fail, buy right into their stop losses, and that will really quickly push your price up into your profit target to allow you to remove some of the risk on this counter trend buying opportunity coming off this low. And again, just make sure you don't buy too aggressively up at that 83.4, right, top of that channel high. All right, so you get the plan for gold for tomorrow. Again, if you're a seller out there, you know the plan. If you're a buyer out there, you know the plan. How about some euro here this evening? How about some euro? Talked about this last week. Bull channel on the euro got broken. We got interrupted. Now we got exactly what we had bargained for. Here was your non-farm payroll report, a white hot, a smoking hot non-farm payrolls on Friday. I think the biggest thing they took away from the non-farm payrolls on Friday was just the participation rate. Finally seeing it tick higher, and that was enough to really discount the higher unemployment rate. More people now getting back into the job market because they feel like there are jobs available for them. So euro really reacted exactly the way that you would have expected it to react on Friday with that big number we saw from non-farm payrolls. So hopefully you guys were able to read that correlation. I went over it last Thursday evening, pretty detailed about what to be looking for. I hope you guys had a good run of that going lower on the euro. As you can see, relatively easy push down once we got that report that came out on Friday. Now, here we are, back to reality now. The dust had settled after that news on non-farm payrolls. Now, again, you can see bull channel. I tend to give that channel the benefit of the doubt. Oftentimes news comes out, smacks things around a little bit, and then, dust off kind of wipe the dust off your jacket and get back on with things, right? And you can see that's pretty much what's happening right now. We had the reaction to non-farms. We are going to be gunning for these bulls right now. You've got easy targets waiting for you overhead here if you're a bull right now on the euro. The ultimate target, though, right now for us to be able to continue calling this a bullish market is going to be that 1381. 1.1381, give or take a tick or two. Bottom line, though, is the euro buyers are going to try to retest that high again. And if they do retest that high again, we should see another pullback and then another attempt to go higher here. We should get that second push, but we got to get to that 1381 first. So euro bullish, but look closer on this, and you can see we're way overbought, right? You get a little bit of a channel there, and woo, way overbought there. Kind of that snap back. There's a reason why we call today Reaction Monday. It's the Monday following non-farms. You know, all the analysts have put all the paperwork back on the desks of the traders. The traders get back to their desks this morning, and they now have a fresh set of analysis documents to go forward with the rest of the month. So we know we're going to see, again, reaction on Friday, snap back here, reaction Monday. I would say right now, you definitely want to be patient if you're a buyer right now. If you're a seller, I think you're really in a good spot right now to clip off a little scalp on the way back down. I'd be shooting for this 1183. This is the 200 moving average. I would definitely be shooting for the 200 moving average as your target here on the 6E. And I think it's a good idea here. Again, the plan, of course, long-term bullish. Very, very short term, though, we're oversold, we're overbought here right now in the very short term. So I would expect price to pull back here. We got a lot going on in the ECB right now, so just be careful trying to be a seller right now. Like I always say, if you're gonna trade counter trend, it's got to be a scalp until proven otherwise. So take a quick first profit target, remove the risk, lock in that stop, and then let the final portion of it run a little bit for you. Again, if you're a buyer right now, you really got to be careful, right? You've really missed the opportunity here buying that level that I gave you guys last week to be a buyer at. If you're a buyer, you want to wait for this price to come back off these highs and then make its next leg up to get to that 1381. If you're a seller, though, you've definitely got some good opportunities right now. But again, clip off some profit quickly, tighten that stop down. Don't put yourself in too much risk position here as you trade short in this bullish move. I want to really look at this next chart, though, because what I see on this longer term euro chart is this. And I probably moved a little bit too quickly there. Let me go back here real quick. Looking at this area right here now, right? We have that channel you can see, and we have an overshoot of that channel high. Well, when I see an overshoot of that channel, when I see an overshoot, okay, whether it be a range overshoot, a channel overshoot, I imagine a poker table, and one side has all their chips in the middle. So right now, the bulls have completely, they're fully committed. They've got all their chips in the middle, and we know that the only way they can get those chips back to then start betting again is to cash out, right, to take their profit. So we know that there's going to be some bulls that definitely reacted to this news, and right, they're buying it up. Well, now, unless we have some other time frame traders come in, unless we have some daily chart traders, weekly chart traders, unless we have some other time frame traders, I don't need to know who, but unless we have an increasing amount of buyers entering this market right now that weren't here before, now it's going to have to pull back here because the people who bought down here are going to be taking their chips off the table. And what happens when you're long and you try to liquidate your long? You have to get out by selling your way out of that trade. So we notice here this bull channel is just torched here to the upside. So we'll definitely expect a little bit of a correction on this. Now, the only thing here that we may end up preventing that correction is this, preventing a huge correction, is this little shorter term channel, which you see did not overshoot the high. So I would definitely, like I said before, I would definitely be looking for buying opportunities as the safest route right now, buying opportunities at support. But if you're going to be a buyer, you really got to be patient right now because of that overshoot. All the buyers are fully committed, right? And if you're a seller, you've got some good targets waiting for you below. Just don't get too greedy. Remember, you're trading short in an uptrend right now, so clip off a quick profit target or two, tighten down that stop loss, and then be ready for those buyers to re-enter right down around those support levels. Keep an eye on this 1200 area here, 1.1200. It puts us right back at that major trend line support there. It's a big round number. You know, this is the euro, and we get a lot, like I said, going on at the ECB right now. We'll see how big the correction is, but you definitely want to be looking for buying opportunities after a correction. We'll be trading that market in real time tomorrow morning in our trade room. Come out and see us. Next up here, let's move to the S&P. Here's another one of those slower anchor charts. Now we have a 16 anchor on the E-mini S&P futures. The ES is a symbol. Now a 16 anchor doesn't seem like it's very slow, but for the S&P, this is about as slow as you want to go, right? You'll notice there's a lot of data on this chart. And the reason is because the S&P has a lot more volume, which means it has a lot lower volatility, right? Higher volume, lower volatility. That's why your broker will charge you a lot lower margins on markets that have good volume, right? Take out the volume, you increase the volatility. And of course, that's why the SEC and the CFTC and the NFA want brokers to look for more margin for markets that have lower volume. So the S&P has very high volume, very low volatility. That's why you got to go out a few more notches, right, to see that larger time frame. What I want you to see on this is that we are right down at the low of that long-term bull channel. Now, we never know what's going to happen at these areas, but we do know to expect some buyers to enter the market. So if you're a big picture trader right now, you've got to be loving this area right now, because this is where, and again, in my point of view as a day trader here, I'm coming in off, I'm in a bearish trend right now. So the longer term traders, I would be definitely looking for those sellers to try and fail, and then look to be a buyer right into where their stop losses were going to be, right? How do you know where their stop losses will be? Well, put yourself in their shoes, right? Have some empathy, if you will, and think about where you would be stopped out, right? Where would you place your stop loss if you were a bear, right? If you were an uninformed bear here right now. So the moral of the story is that we're going to see some buyers enter the market here. If for whatever, if not for the low of the channel, but just because look at how far away from that 200 moving average we are, right? Going back up to that 2100 area here on the ES. So we do expect some bulls to enter the market here. We don't need to overcomplicate this. Just be aware of where you are. If you're a long-term bull right now on the E-mini, I would be looking for sellers to try at short-term resistance to fail. Just you want to get to it faster, though, if you're a buyer right now. If you're a seller, I would definitely be expecting to see a bit of a correction here before we make our next push lower. Speaking of correction, how about we look for a channel here coming off this low, and let's see if we can find some opportunities looking at a little bit more intimate environment here, if you will. And we'll take a look at this now, going from the 16 anchor down to the 8, and now you can see this is a lot, in my opinion, this is a more relevant chart for a day trader. That previous chart, I just wanted to show you a little bit more information of the big picture here. What do we see? This is my 8 anchor chart, right? A much more appropriate anchor chart for a day trader. E-mini S&P, we're bearish, and we're oversold at the lows of the channel, and we're also at extension support. So a couple things here. ABCD, this is the same ABCD that we had late last week, and you can see here we have an extension. Remember, we had a measured move right about 2085, and then now we have that extension support. This level's been there for 2 weeks now, so there really isn't anything surprising us there that price bounced off that support level. The second thing I want you to keep a close eye on, though, is this channel. We actually have a couple channels here. The one that I'm referring to, though, is this more major channel, right? We rotate from the highs down to the lows, back up to the highs, back down to the lows. And so here we are. Now, most likely, we're going to rotate off these lows And you know what's going to happen. The sellers really are going to, the buyers are going to try to get this all the way back up to the channel highs before giving back control to the sellers. We're clearly bearish. Okay, we're clearly bearish, but in my opinion, we're oversold. We're down near the lows of this channel. So in all reality, buyers, you guys have the short-term opportunities buying these lows and taking profit at the resistance areas overhead. Sellers, you guys and gals want to stay patient right now for the best trades coming up at resistance areas overhead. So you want to be looking for price to get up towards these resistance areas and then use those red lines and red boxes here for your best tradable opportunities here on the way back down. All right, buyers, you guys have a short-term opportunity here. And again, in this environment, very similar to what we saw on gold. If you're in a downtrend like this and you want to be a buyer, the easiest way to do it is look for short-term resistance areas such as that 2086, 88 even, 90.75, and look for those sellers to try and fail in that area and buy right into their stops. On the S&P, we actually have a rollover coming later on this week. It's on the 11th. So what do we got here? Today's the 8th, 9th, 10th, 11th. So Thursday, Friday will be rollover here on the E-minis and on that euro. So keep an eye on that one as well. Let's keep going. Wrapping up here now from the S&P 500 to the crude oil futures, the CL. We're on the 715 contract right now. And once again, sticking with our top-down approach this evening, we'll look at the larger time frame and then we'll whittle this sucker right on down to the faster time frame. We had been trading inside of this long-term bull channel for quite some time, right? We saw this goes all the way back to the beginning of March. Now we can see here we had a channel break of the low. Okay, and just like on the euro, remember how back on the euro I said those bulls were going to try to force this back to those highs? Well, the buyers had the same job here on the crude, right? The buyers had one objective here, and that was to return back to those highs. The break of the channel happened last week. Last week, 2 weeks ago, was it late 2 weeks ago? What's that date here? 5/28. Yeah, so it was over on Memorial Day weekend. We saw that low being broken. We break the low. You can see those bulls, they definitely gave it the old college try, trying to retest that 63.43 area, trying to get it back up to rotate to those highs, and they clearly have failed. And then very classic scenario, we actually see them use the lower end of this trend line as resistance before making that push lower. That is a very classic scenario to what happens when, in this case, when the bulls fail to retest that high after the bull channel break. So at this point, I would say we either go sideways a bit until we figure out what long-term direction. You can see we're kind of flattening out in the big picture, but we got to be thinking to the downside here right now, because just like those buyers trying to retest the highs of the bull channel and failing, well, these sellers, they're going to try to rotate down to the lows of that bear channel, and that puts us big round number at 55, and you got some long-term targets waiting for you bears out here as we go through the rest of the week. So keep an eye on that. Again, you got this chart. This chart should be good for you for the rest of the week here. But at this point, though, the way that this chart looks, this chart clearly tells us the buyers have failed. The only real question you would have on this chart alone is, are we going to be ready to make that next push down, or was this lack of a lower low here, right? That lack of a lower low there, are we going to kind of balance out here until we get another inventory report on Wednesday? Let's take a look at a faster time frame now, and maybe we can get a little bit better clue here. Okay, now we're looking a little bit easier. Now we have a lot more information to use, right, if you will, right? So crude oil, bearish and pushing lower off the highs, long-term bear channel. Sellers, you guys are looking for trades at resistance levels on the way to the target at the low. Got to be keeping an eye on that low here, 56.84. That's going to be an easy target for you sellers long-term here, hopefully later on this week. I shouldn't say that. Now that you look at it, 58.25. It's only shoot, $1.75 lower here. So shouldn't have any problem revisiting those lows intraday tomorrow. That shouldn't be a problem, right? We usually get between $2 and $3 ranges here on crude. So sellers, you guys are looking for opportunities up at these resistance areas overhead. Sellers, you guys have some easy targets waiting for you. I've got 57.74. That'll be a little bit of an interim target for you guys, the downside. The nice juicy target, though, comes in here at 57.34, and then again, a retest of that low at 56.58. So looking to sell here at resistance. We'll also have some more short-term selling opportunities for you guys and gals who are with me tomorrow in our live trade room. So definitely come out and join us at 8 a.m. tomorrow morning for that. And how about the buyers? Buyers, you guys can look for times when the sellers try and fail and send this thing back higher again. If you're a buyer right now, look what we have here. We have a short-term channel, a very handsome, very well-behaved bull channel, and we have a buyer target there, 59.20, and then, of course, a major range target up there at the 60.56 area. So once again, this really looks similar to what we've already seen a few times today on gold. What else we see on the S&P? And that is, if you want to be a buyer right now in this downtrend, best ways to do it is wait for that price to try to go lower off that resistance. And you know where the stops are going to be. Just buy right into that stop loss. That should be enough to force that price higher into a quick first target. Because remember, if you're trading counter trend, every trade must be considered a scalp until proven otherwise, right? Because you just don't know how far they'll go when you're trading against the current like this. So sellers, stay patient. Look for selling opportunities at the resistance areas overhead. And you buyers, make sure you're buying into those sell stops or the buy stops, I should say, from the sellers as this price goes higher. Guys and gals, a little bit more information before we wrap up here. I do want to let you know here before I let you guys go here tonight. Again, make sure you grab the free pass, register for the newsletter list, and download those charts. I am going to be forced out of my office on Wednesday this week. That is the 10th of June. My office has some construction outside. They got to cut the power for the whole day. So rather than pick up and move the whole office for about a 12-hour period, I will not be here on Wednesday evening. So we've got another newsletter in store for you guys tomorrow night, Tuesday. Wednesday, I won't be here all day. I'll be here early in the morning just to make sure everything's under control. Right, I got my right-hand man, John Henry, running the room for me on Wednesday while I'm gone. Our room is never closed if I can't be there for some reason. And then, of course, again, Wednesday night's newsletter, unfortunately, you'll have to do without me on Wednesday night, and I'll be back to wrap things up on Thursday night. All right, guys? So a relatively short week here for me this week, unfortunately, but hopefully they won't need to be taking the power down anytime soon other than this Wednesday. So just a heads up on that. Wednesday, I will be out of the office. Our office will be open. I work in a separate office here locally here in Los Angeles than our corporate headquarters. Our main corporate headquarters will be open. Power will be on that. But my satellite office, though, power will be out for that day. So I'll see you guys tomorrow night, same time, same place. And again, like I always say, guys, remember, you might be alone right now watching this video, but please don't forget you're never alone out there in your trading career. We are always here standing by. We got a great free trial for you guys and gals. You'll learn more with me in 1 week on that trial than you will anywhere else on the web. I'll tell you that much. We offer beginner, intermediate, and advanced levels of membership, and we always have someone standing by 24/7 to answer all your questions. Guys, don't be a stranger out there. My name is Joseph. Thanks so much for being here today. Thanks for all the great questions that came into our YouTube channel over the weekend. Feedback, I always love your feedback. Post a comment below the video or shoot me an email at jj@schooloftrade.com. And I'll plan on seeing you guys and gals, members, tomorrow morning at 8 a.m. If you're not a member at School of Trade, next time I see you will be tomorrow evening, 8 p.m. Eastern Time for our next edition of our nightly newsletter. You guys be well out there. Be nice to each other. And I'll see you tomorrow. Adios, amigos. Bye-bye for now.